All right, guys, Darren from Honest Money, and in this video, we're going to be taking an updated look at how to pay yourself as a director of a limited company in 2021-2022. Now, I released a version of this video last year for 2020-2021, and it was a huge hit on the channel and has had over 250,000 views. So thank you to everyone that watched that video and the support you showed. So there's a bit of pressure on this video to make sure it's good. So what I've done is gone through last year's video and updated all of the figures and also added on some additional information that wasn't included in the previous video. Now, before I actually get to the salary, I need to run through a few things you need to be aware of as a director of a limited business. As once I get to the recommendation, if you understand all of these areas, it will make sense why I'm recommending the figures that I do. So up first, let's take a look at corporation tax. So corporation tax is payable against the net profits made by a limited company. So the net profits are the profits that are left over. So for example, you might have generated sales of maybe £50,000, but if you've got £20,000 of expenses, then you're only left with £30,000 of net profits. And that is what you'd then pay corporation tax on. So the current rate for 2021-2022 is 19%. Now that will be changing from April 2023. For the purposes of this video and for this tax year, the only figure you need to be aware of is that 19% tax rate. But just so you're aware of it for future tax years, the plan is from 2023, it will be increasing to 25% for businesses that make over £250,000 in profits. However, if you are a small business and have profits below £50,000, it will remain at that 19% rate. Now, there will be a marginal rate between the 19% and the 25%, and that will go up depending on how high your profits actually are. So allowable business expenses can be offset against net profits to reduce your corporation tax liability. So I'm just going to offer you some of the most common expenses that I've come across through my many years of working with limited businesses. So up first is your salary. So this is your PAYE salary. It does not include dividends. Remember, dividends are paid from your net profits. So that is why they cannot be included as a business expense. You then have home office use, which is going to be super popular at the moment with everything that's gone on in 2020, 2021, and probably into 2022 as well. So you can claim £6 a week for home office use, and there will be no questions asked by the HMRC. So definitely claim that. You have mobile phone contract. Every director should be absolutely fine to have a mobile phone contract and put that through the business. If you're using your personal car for business meetings, then you can claim business mileage. So you've got 45p per mile for the first 10,000 and then 25p thereafter. Alternatively, if you're considering the company car route, which I would have previously recommended against, at the moment, the benefit in kind tax on electric vehicles is currently 0%, and that will be increasing to 1% and 2% in the coming years. So certainly worth looking into a company car if you would consider an electric vehicle, as there are some really good tax breaks on those at the moment. Just keep in mind, if you do have a company car, you cannot claim the 45p per mile tax break. Instead, you can only claim the actual cost of the fuel. You also have things such as accountancy fees and pension, and there are many, many other allowable business expenses. Just speak to your accountant to ensure whatever you think about buying can be put through the business as a viable business expense. Up next, we're going to take a quick look at income tax, and I'm sure many of you guys are familiar with. So income tax is paid on your income, so it's excluding dividends. It does not apply to dividends. Everyone gets a personal allowance, so this is your tax-free allowance. So in 2021-2022, everyone can earn up to £12,570 completely tax-free. Now, that doesn't mean you won't pay any national insurance on it, but you won't pay any income tax on it. So the income tax rates for this year, you've got the basic rate, which is £12,571 to £50,270. That's at 20%. You then have the higher rate, which is from that figure up to £150,000. Then the additional rate over £150,000 is 45%. But you can see there, I've got that note, personal allowance decreases by £1 for every £2 of income above the £100,000 mark. So I've got in brackets there the 60% tax trap. So what that means is once you reach the £100,000 income mark, for every £2 that you earn, your personal allowance decreases by £1. So eventually, if you earn enough, so based on your personal allowance being £12,570, once you've earned around about £125,000, your personal allowance will be completely eroded. So you'll be paying tax on that money as well. And that's why it's called the 60% tax trap. And I've actually got a video dedicated to it on the channel, and I'll link to that in the top comment and in the description. Now, next up, we have national insurance, and national insurance is one of the biggest reasons why I recommend you pay yourself the way I do later on in this video. So up first, we have what is called the lower earnings limit, which is the LEL, or for the purposes of this video, I'm going to call it the benefits threshold. So this is how much you need to earn to get the most important benefit, which is your state pension. So providing you earn above this LEL, you will get your state pension token for the year, and those will build up during your working career. And if you accumulate enough of those tokens, then you'll get a full state pension. So whether you're an employee or if you're an employee of your limited company and you're paying yourself the way I'm going to recommend, make sure your basic salary is above this threshold so that you can qualify for the state pension token. Up next, we have the national insurance primary threshold. So I've got here, this is the personal, this is the employee's national insurance. So you as the employee, this is your threshold. So you can earn up to those values before you have to pay any national insurance. So if we just take the annual total, which is 9,568, that is how much you can earn before you pay any national insurance. Then above that, you'll pay at 12% all the way up to 50,270. And then after that, you'll only pay 2%. Now, the threshold that you really need to be aware of from a limited company perspective is the secondary threshold, as this applies to the business. This applies to the employers, not the employees. So you can see here, I've bolded the annual figure of £8,840. Now, the reason that is important is that is when the business starts paying national insurance. So despite the fact on a personal level, you can earn a bit more before you pay national insurance, that is at which point you will start paying national insurance from your business. So national insurance is paid by both the business and by the employee. So if you're the sole director of a limited company, you own the business and you're an employee, you get taxed from national insurance from both areas. So it's a double taxation, and that's why we pay ourselves the way I'm going to recommend later on in this video. So employers pay national insurance at 13.8% above the secondary threshold with no reduction over 50,270. So when you combine the employee's NI with the employer's NI, you get combined NI taxation of 25.8%. So keep that in mind as we go through the video. Now, before I get to the salary, let's just run through the dividends quickly to give you a background on dividends and how they work. So dividends are only payable to shareholders from profits or retained profits from previous tax years. So they've got to be paid from your net profits. They can't be paid from your gross profits. But if you've got profits from previous years, you can pay dividends from that. That's absolutely fine. Now, dividends are not subject to national insurance, so you've got no worries about the employers or the employees' national insurance when paying out dividends. And they can be paid throughout the year. So I pay my dividends monthly, and they're called interim dividends, or you can pay them after your annual accounts, and then they're called final dividends. But really, it doesn't make any difference. As long as you're confident there is enough profit in the business to pay yourself those dividends, you should be absolutely fine. Now, one of the questions that I do get asked quite frequently is when do you actually pay, or how do you actually pay that tax on those dividends? So what would happen is at the end of the year, you'd do your self-assessment, and then the HMRC would tell you how much tax is due on those dividends. So keep an eye on the dividends you're paying yourself throughout the year. Keep an eye on the threshold that you fall into. And just put that amount of tax to one side so that when you get to the self-assessment, there isn't a massive tax bill that you can't afford to pay. So you don't pay the tax immediately when you pay yourself, you pay it once you've done your self-assessment. So everyone gets a tax-free dividend allowance of £2,000 plus the remainder of any unused personal allowance. So if you recall, you have a personal allowance of £12,570. On top of that, you get an additional £2,000 dividend allowance as well. But let's say, for example, you only pay yourself a salary of £8,000. That will leave you a total of £4,570 available as tax-free dividends. So if you don't pull your personal allowance as a PAYE salary, you can pull the remainder as tax-free dividends instead. So effectively, you have a total allowance of £14,570, as that's your personal allowance plus your £2,000 tax-free dividend allowance as well. So keeping that in mind, these are the dividend tax rates. You have the basic rate, which is from £14,571, which is your £12,570 of personal allowance plus your £2,000 of tax-free dividend allowance, all the way up to £50,270. That is what you'd pay 7.5% on, so make full use of that each year if you possibly can. Above that, from 50,271 all the way up to 150,000 is taxed at 32.5%, and then the additional rate over 150,000 is taxed at 38.1%. So before I get to the actual salary itself, if you're finding this video useful, I'd really appreciate it if you could scroll down, hit that like button, and if you want to see more videos from me, subscribe to the channel. So this is what you guys are all waiting to see, and this is my recommended director salary for 2021-2022. Now this is for a sole director of a limited company without employment elsewhere. If you are a dual director, then I have something for you in a moment. So stick with me as we're going to take a look at the employment allowance after this. So in 2021, 2022, you can earn £14,570 tax-free. As we discussed on the previous slide, you have your personal allowance and your dividend allowance. However, do not pay yourself £12,570 as a salary due to the double national insurance liability that I mentioned. So you don't want to be paying double national insurance from both your employer and employee's perspective. Instead, pay yourself a salary that is just under the national insurance secondary threshold, which is the point at which your business would start paying national insurance, and pay the rest as dividends. So this is an example based on a £40,000 per year income. This is how I'd pay myself as a sole director of a limited company with no other employment. So firstly, the recommended salary, I would go with £8,832 per year, which is just below the £8,840 secondary national insurance threshold, but above the LEL threshold to qualify for the benefits. So you'll still get your state pension token each year, but you will not pay any national insurance on that from either an employer or an employee's perspective. And then pay the rest as dividends. So from 8832, which is the salary, your PAYE that you're going to pay yourself, up to 14,570, which is the remainder of your personal allowance plus tax-free dividend allowance. You've got another £5,738 there at zero tax. And then from 14,570 all the way up to £40,000, you're only going to pay 7.5% dividend tax on that, which means your total tax on that salary is £1,970 and 25 pence. But keep in mind, you would have paid 19% corporation tax on those profits before you can pull those dividends as well. Now, finally, just to mention the employment allowance, this isn't something I mentioned in last year's video, but I wanted to introduce it this year as people had asked about it in the comments. Now, the employment allowance was introduced maybe 5 or 6 years ago, and the idea was to encourage small businesses to employ people, and in exchange, the government would waiver some of that initial employer's national insurance. So it allows eligible employers to reduce their national insurance liability. However, it is not available to sole director limited companies. Now, I know that means that will knock a lot of you guys out that are watching this, but I also know there'll be some people watching this video that aren't sole director limited companies, and they might find this useful and may want to discuss this employment allowance with their accountant. So it's available to employers with at least 2 employees earning above the NI secondary threshold. So providing both employees are earning at least £8,840 via PAYE, then they should be able to claim the employment allowance. This can also include husband and wife directors. So this is very common. If your wife or husband is also a director with you and part of the limited business and you're both above that secondary threshold, then you can both claim it. And the current allowance for 2021-2022 is £4,000. So if you're a husband and wife director team, or maybe you only have a couple of employees, then hopefully that will be enough to pretty much eliminate the employer's national insurance bill. So it's definitely worth looking into. And if the employment allowance is available, then don't go with my previous recommendation. Instead, pay yourself the full £12,570 and use your full personal allowance. As although you'll pay employees NI at 12%, you'll save money overall as the additional salary won't be subject to 19% corporation tax. But like I say, if you're considering employment allowance, discuss that with your accountant, because it does vary from individual and business to business as to what's available, as to how much you can claim as well. So hopefully you found that useful and you've got a better idea of how to pay yourself as a director of a limited company. If you did find this useful, I'd really appreciate it if you hit that like button. And if you want to see more from me, subscribe to the channel, and I'll see you in the next video.